In the weird world of Bitcoin, there's a fascinating twist where having less actually means more. Sounds intriguing? Forget about complex jargon. I'm here to make it crystal clear just for you. Let's start with the basics. Bitcoin is a digital asset made by computers solving very complex puzzles. This process is called mining. Miners receive Bitcoin as a reward for their work. Every 4 years, something called the Bitcoin Halving happens. This is a big event in the world of Bitcoin, especially for Bitcoin miners. During this event, the reward that miners get for adding new transactions to the Bitcoin blockchain is cut in half, which is where the term halving comes from. So why does this happen? It's all part of Bitcoin's design to control how many Bitcoins are created over time. There's a total limit of 21 million Bitcoins that can ever exist, and halving helps make sure we don't run out too quickly. It's like if you had a limited number of cookies and you decided to give out fewer cookies each time to make sure they last longer. Now let's look back a bit. This halving isn't new. It happened a few times since Bitcoin started. The first halving was in 2012, then again in 2016, and the most recent one was in 2020. Each time the reward for mining new Bitcoins was cut in half. This might sound a bit odd at first. Why would making less Bitcoin be a good thing? Well, it's all about supply and demand. If something is less available and lots of people want it, its value can go up. That's what can happen with Bitcoin after a halving. Less new Bitcoin means it can become more rare and potentially more valuable. So Bitcoin halving reminds us every 4 years that Bitcoin is a bit like treasure, rare and sought after. And that's what makes it super exciting, especially for investors. Looking back after each halving, Bitcoin's price has had some pretty interesting movements. Not right away though. The price doesn't just zoom up the day after halving. It takes a bit of time. But predicting exactly what will happen is tricky. You should remember, the crypto market, it's like the weather. You can guess what's gonna happen based on patterns, but sometimes it just does its own thing. So, when you hear people making big claims about where Bitcoin's price is headed post-halving, take it with a grain of salt. It's a mix of educated guesses and hope. We look at past trends and get excited, but the future is always full of surprises. Now, let's talk about a common feeling when dealing with crypto. FOMO, or fear of missing out. Especially around halving, everyone's guessing about what's gonna happen next. Will the price skyrocket? Is now the time to invest? It's easy to get caught up in the hype of it all and feel like you're missing the boat if you don't jump in right now. Investing, especially in something as unpredictable as Bitcoin, is thrilling, but it can also mess with your head. The key thing to remember is that crypto markets are super volatile. They go up and down a lot, and sometimes for reasons that don't seem to make any sense. Now, this is where the psychology of investing comes into play. It's not just about the numbers. It's about how you react to them. Do you panic sell the moment things start looking a little bit shaky? Or do you get too excited and buy more during the hype without thinking it through? Both can lead to making decisions that you might regret later. But here's a little secret that's not so secret. The most successful investors are often those who play the long game. They're the ones who don't get too shaken by the short-term ups and downs. Instead, they focus on their long-term goals and stick to their investment strategy even when things get a bit wild. And they understand that Markets have good days and bad days, but it's the overall trend that matters more. So if you're feeling the FOMO or getting jittery with every little dip, take a step back. Remember, investing is a marathon, not a sprint. It's about making informed decisions, not just reacting to the latest headlines or tweets. By focusing on your long-term goals and not getting too caught up in day-to-day drama, you'll be in a much better position to navigate the crazy world of Bitcoin investing. And who knows, you might just find that by not chasing the hype, you'll catch the opportunities that really matter.